Markets are setting up for their next move, which looks like it's possibly going to be one more leg down here in the near term. Hopefully that may be it for a while, but let's take a look at it and see what's going on. So the markets have been a little all over the place. The futures opened up a little bit, then down. Then the markets were down as much as 600 points, at least the Dow was earlier today. It's 1 p.m. Eastern Standard Time as I'm making this, and we'll see what happens. The markets bounce back a little bit during lunch, and they're continuing the sell-off. So we'll just have to see how far it goes towards the afternoon. I think it was down as much as 700 points at one point. So anyways, the NASDAQ's not doing too bad, only down 0.19. We'll see how that finishes out the day. But it's the S&P and the Dow taking the biggest hit today, down as much as 2% on both of those indices earlier today. The bond markets are continuing to lose a little ground here. And, 2.79 when they were at 3.4% on the 10-year at one time. And the reason for that is the flight to safety. So a lot of recessionary concerns out there right now, a lot of inflationary concerns affecting earnings that are coming up. CPI projections are coming in hotter than last month. And of course, recession indicators are all flashing that the GDP may contract as much as 2%. So we'll have to see how that comes out when we get those reads. But the big thing is earnings. All eyes are on earnings season right now as companies are starting to adjust now to the cost of producing versus the loss in sales that they dealt with through the pandemic. So still a lot of issues out there to get through. Oil is dropping like a rock, down 9% as recession fears mount. And, that's a good indicator right there. The benchmark falling below $100. A lot of people were calling for $150 oil. And, I had Gareth Soloway on a few weeks ago, and he said oil had peaked in the near term, was looking for a downside, and he was right. I think he shorted that move. I'll have him back on again one of these days, and we'll have to see what he's thinking, in the longer term for oil. And the dollar is on a tear today as well. We'll take a look at that in a few minutes. But other than that, general outlook, what we're looking for right now, obviously the next big thing next week on the 13th is the CPI that's going to come out, the inflation reading that's going to come out, and then the Fed will respond the following week accordingly. So the next couple of weeks, markets are going to kind of, start working their way towards the expectation. And right now they're pricing in more downside from inflation and the entrance or slowdown leading into a recession, entering into a recession. And here's another reason I think the markets yesterday. So, Bitcoin and crypto had a decent day yesterday. And again, futures were up a little bit. And I think I tweeted the reason why. All the bears were grilling out yesterday for the 4th of July in the United States. So I think that's why the markets kind of had a little bit of a bounce yesterday, a little bit of a reprieve. And they're down today. Well, I tweeted this. The bears are back to work. I'm so glad the holiday is over. So that I could come back to work. The bears are back in action today. So I think that's what's really going on. So anyways, let's take a look at Bitcoin right now. Here's Bitcoin on the hourly. And again, we've had these nice little swings here. And, when you look at it on the hourly, you got a lot going on here with Bitcoin, a lot of liquidations of the shorts and longs going on here as, at the end of the day, when you look at the daily, it's just ranging exactly like it's done every other level, kind of getting ready for the next wave. And a lot of times when the markets are moving down like this and Bitcoin is kind of holding steady, it's a little bit down today, but it was up yesterday, but holding steady. Sometimes Bitcoin will lag traditional markets on that leg down. So I think we're going to get the test tomorrow, probably, if not later today, going into tomorrow. We're probably going to test this lower $17,000 region again. And if that breaks, then we know what we're looking for. Ultimately, this area here that's provided a lot of support and resistance. Again, what is support? Buyers. What's resistance? Sellers. So these are people, having to sell, mostly the miners that are having to sell. We'll take a look at that in a second to kind of hang on to, to be able to stay in business, trying to hang on, pay off debt, generate, operating capital, and pay off, just general operating expenses as well. So without the price being, well above 30,000, this was break even for the miners in that, low 30,000 range. So they're losing money big time right now, and they're starting to sell. But if this area here breaks, then your next major support areas at that 12,005, 12,600 region. So this is, pretty interesting if the price breaks below 17.8. And really the last line of support is about 16,000 in this range. If it breaks that, it'll be heading down to that 12.5, 12.6 range. And we'll have to see what happens there and see if that ends up being the last line of defense right there for Bitcoin. Of course, a lot of it depends on what the Fed does, what the inflation looks like, recessionary concerns, things like that. A lot of things affecting it. ARK Invest is neutral to positive on Bitcoin as they are awaiting capitulation. As I've said before, we have not seen real capitulation. We have not seen real panic selling yet. And that's what, Kathy Wood, ARK Invest, one of the biggest Bitcoin bulls on Wall Street out there, is what they're still looking for. They think that there's one more leg down. They're targeting the 16,000 range that they think might be more of the downside. And so the consensus is building around a drop to around 16,000 with the majority of on-chain indicators already at lows, seen either rarely or never before, like we've talked about in terms of the 200-week moving average price closing below that. Historically, the 200-week moving average has figured as a bottom indicator for Bitcoin. In this cycle, things may be different because that bottom, all of these rules of thumb and historical averages and price data and all that was previous to a bear market, Fed quantitative tightening cycle, interest rate hike, Fed tightening into a recession. That was a whole different market cycle back then than what we're facing right now. So that's just something to keep in mind on all of those, historical indicators that we'll take a look at a couple of those right now. And of course, as I stated before, some of the miners are still, hanging on that haven't really sold a lot. One of the indicators, the MVRV score, the market value, realized value, that a lot of people are looking for, that generally pegs bottoms. All of these bottoms were pegged in this area, and these, previously that was in a, Fed friendly bull market environment. Very different environment here. So it'll be interesting to see if this area holds up like it's done in the past. And as you can see, there's still a bit of downside to go yet before the bottom of that area is hit like it's been in the past. So we'll just have to kind of see how that all plays out. And where this ends up. And of course, if you take a look at the weekly and take a look at that 200-week moving average that a lot of eyeballs are on right now, price is definitely well below that. Closing on a closing basis, never really done before. Bitcoin is putting in a lot of never done befores in its history because, again, it's never seen a market like this before. That's why you're going to see, that's why this time is different. That's why you're going to see a lot of different outcomes and a lot of different things, like going below previous all-time highs after a new all-time high has been set, going below the 200-week moving average, just doing all these different things, all the on-chain analytics and analysis. You got to remember all of that is lagging indicators. So all it's doing is tracking previous price areas. And, even the drawdown of 85% the Bitcoin has seen in this, historical lifetime. Will that hold up this time? Will it draw down, 90%, 99%? This is a very different Fed environment right now than it was in the past. And the all-time high was at 64,000. So if you take, 80 to 85% there, that's 12,000. If it gets down to 85% is 10,000, just around 9. So 80% drawdown would be 12.6, 75% drawdown from there is about 15.5. 90% drawdown is going to put Bitcoin at, let's go there, 6,100, and a 95% drawdown puts it at about $2,500. So $3,000. So, where is Bitcoin going to go? That's from this all-time high, which the Pi cycle top indicator nails. That is the bull market cycle top, previous all-time high. This was an irregular correction. So let's just take these measurements from here. So if we go down 75% from there, that's 17.1, which we, Bitcoin's kind of already done that. 80% drawdown puts it at about 13.6. And then 85% puts Bitcoin down into the $10,000 range. And then of course, 90% would put it at 6,500, 95% would put it about 3,200. So those are all levels in the past that have some confluence in terms of previous bear market bottoms. A couple of times that 3,500 $3,000 to $3,500 level was hit most recently in the March pandemic. Not saying it's going there, not even saying that's on the cards right now or in the cards right now. I'm just saying those are major market structural areas that Bitcoin has visited before. And then, of course, if you look at Bitcoin dominance trending up a little bit today, down a little bit, not, kind of up and down all over the map. ETH dominance kind of bouncing around a little bit as well. Then you can see the total 3 kind of dancing around. So everything is kind of waiting for CPI. And as you can see, we've been marking this off before. What price is doing is just taking these levels. This right here would have been your next leg down, but Do Kwon was getting in there buying a bunch of stuff. MicroStrategy got in here, bought a bunch of stuff. Those buyers are out of the market now. So it's a very different environment here, keeping things propped up. So these are the levels that Bitcoin's been kind of marching on right now, just like the stock market, kind of unwinding ahead of the CPI print, Fed moves, things like that, kind of pricing in levels at a time. And really what this boils down to is, distribution cycles, right? Accumulation on the bottom, distribution, accumulating on shorts, distributing down, accumulating on shorts, distributing down, liquidating, these shorts and distributing down. And a lot of people look at the Wyckoff distribution chart and, it looks a lot like this, where people look at these areas looking for the price to immediately spring back, after these levels, but it can do this for a long time. These are just distributions that this pattern does, and this can repeat, for multiple times. So when you look at some of the, if you look at Wyckoff distribution that a lot of people like to reference. So let's look at Wyckoff, look at Wyckoff patterns, and you look at something like this, that obviously you've seen all over YouTube in the past. When people look at these distribution patterns and cycles, you can see that these oversold, overbought environments, oversold can last a long time. You're hearing a lot about oversold conditions and, RSIs at record lows and things like that. Price can remain oversold for a while. So these, little areas here of, last point of supply and sign of weakness, this can repeat over and over. This doesn't always have to go, 1, 2, 3, like this pattern is showing. This is just showing an overall distribution pattern where the price gets marked down. And a lot of people mistake that in thinking that it's immediately going to rebound once it completes 2 or 3 of those legs. And, price can continue in a lot of different ways as it goes along in that cycle. It doesn't necessarily have to, let's go back and look at one of these other charts. It doesn't necessarily have to complete itself right after it does, 1 or 2 of those, legs down like that and automatically, get this recovery and bounce like we see in a lot of these areas. This is the one I was really looking for right here that a lot of people reference right now is this type of a situation here where people think, you get the main distribution top, you get a couple more of these, and then you get that bounce out of there. These distributions here, or accumulation, but when you're going down, this could be an accumulation of a short and then mark it down, accumulation of a short and mark it down. So this can continue on for a good way. It doesn't have to end after 1 or 2 cycles and then automatically, just kind of repeat itself in the cycle. Some of the other things that, we've been looking at here, when you look at, let's see, the R HODL unrealized, the Newpol unrealized net profit loss. You can see that, Bitcoin still hasn't reached some of these lower levels it has in the past. But again, this was in a Fed-driven, liquidity-driven bull market cycle. So according to even the on-chain stuff, which is always bullish, nobody ever looks at risk management when it comes to on-chain. All they want to talk about is, to the moon prices and things that are unrealistic in the environment that we're in right now. Price still has a ways to go, even according to the on-chain data that we just looked at there. There still seems to be, more likelihood. I'm not saying it will, not saying it has to. Nobody knows exactly where price is going to go, and this is the one thing, the lower prices go for Bitcoin, Ethereum, the altcoins, the lower these prices go, the more they can bounce from a percentage wise along the way. So you can get 20, 30, 40% bounces along the way. And it doesn't take a lot of capital to do that. So, a whale or two could come in here and really drive the price of Bitcoin back up into this $30,000 range fairly quickly. And if it did that, that bounce could be somewhere in that 50, that could be a 50% bounce. And we saw that kind of happen over here at this range when price dropped to 33,000, bounced 45% up to 48. And, that was Do Kwon, Sailor, a few other buyers that were driving that price action. Those buyers just aren't here now because you can't borrow money at zero interest. Liquidity's dried up. Same thing with valuations in the stock market. Let's just kind of take a look at the Dow, continuing again, just like Bitcoin, level after level after level, just kind of working its way down. Here's the NASDAQ kind of doing the same thing. And we've looked at bear markets in the past. This takes time to unwind, right? There's been years and years and years of trillions of dollars of liquidity pumped into the market that is unwinding. What the Fed is trying to do is a steady, orderly unwinding of valuations. And same thing with the housing market, same thing with the financial markets. So those are the things that I'm looking at right now in terms of where the market's heading. So, the takeaway is a lot of times Bitcoin can lag traditional markets. So if traditional markets continue to sell into the close, have a big leg down today and close 600-700 points down in the Dow, 1 to 2% on the S&P and the NASDAQ, Bitcoin could end up testing, those lower levels either later tonight or tomorrow behind the markets. And then we'll just have to see what earnings look like. If earnings are soft and companies are missing their projections, and more importantly, providing poor guidance for future earnings, which I think they all will. So they'll just say, look, we just don't know where we're going to be next quarter because they're not sure where their cost of goods are right now. They can nail pretty much sales. Demand is dropping and dying a little bit, but their cost is the big caveat right now that they don't know where that's going to be in the near term, just because of supply chain issues, labor issues, things like that still. So we'll just have to wait to see what earnings and guidance looks like. And then we have the CPI print. If that comes out hotter, then obviously, the market's going to do like it did the last couple of times, continue to unwind those next leg down, which would be in that, if Bitcoin breaks that 17.5 range, dropping down to that 14, 15, potentially down to that 12.5 level that we were looking at in terms of testing that lower end range over the next few weeks as we get through the end of the month. And then we'll just have to see where things level off there. If inflation levels off and plateaus, I think markets can kind of plateau for a little while until we see how much real slowdown there is in the economy from a growth standpoint, what GDP really looks like after inflation peaks. And then the Fed can either back off a little bit or maintain where they're at towards the end of the year. So we're looking at 75 to 100 basis points based on inflation print. Minimum of 75. I don't think they're going to back off that. May go 100 if the inflation print's really bad. But then after that, if inflation levels off and the Fed feels like they can, either ease up or stop altogether, which I don't see that happening this year, but it's a potential, then, that may help markets kind of stabilize, find a bottom, and just kind of level off for a little bit until we see where the economy stands. Because the big thing that the markets can't price in is recession and the effects of that, because nobody really knows. So that's what I'm looking at. I'll see you on the next video.